just been marking and this idea came to mind. Doing a lot of marking. Have you ever thought about why businesses are making so much profit, but few months later they collapse? The profits are very high, very good on paper, attracting investors, which is good. But why then do they fall? Why the failure of businesses? Why do they collapse? What are the key reasons for this collapse? Okay? The key things that they're focusing on is profit. And profit is different from cash. As a business person, what you need to focus on is more of the cash flow than the profit. The profits are mainly good for the managers because they get bonuses and compensated on that. But as a businessman overall, think more about the cash. And why is that? Because profits are prepared following the International Accounting Standards, which says that you can record transactions whether you received cash or not. And what happens when preparing the profit or loss statement is that we follow the accrual method of accounting, whether you've received cash or not. So if I have sold an item to a customer on credit, which means that customer is still owing me, I have not received the cash yet, but in my books, I have written that I've sold those items for maybe £10,000. Okay? Because of recording such transactions, of course, your profit figure would go up. But in reality, what is happening? The money is not with you. The money is still out there with the customer. And that is the reason why, at the end of the day, after taking, so profit, you take sales, subtract your expenses. Expenses are things like heat and light, telephone bills, electricity bills, rents, all of those expenses. And then you get your net profit. Good news is that we can unravel the reason why this is the case. Where profits are painting a rosy picture about the company, but in reality, the company is collapsing. We've talked about having receivables, where a scenario where the money is still with the customer and you have not received it, yet you have gone ahead in your books and you've written that you've made a sale. So my advice to you is make sure you receive the cash before you record the sale. Okay? Why? Because profits, again, are generated using the accrual method of accounting, but cash flow is generated using cash method of accounting. Okay? The best thing to do, or another example I'll give you, is a case of tax. Lots of people forget to deduct tax, forget to set aside the money for tax. When they're trying to calculate profit, they only subtract immediate expenses. They forget to take out the tax. And usually your tax is calculated based on the profit that you've made, and you can pay 1 year later. Okay? So if you're doing a business now and you haven't set aside that money for tax, yes, the profit figures will look very high. By the time you deduct the money for tax, it will go down. Another good scenario is to think about the loans. If you take a huge amount of loan from the bank and you haven't paid it, and remember, the loans will be reflected in your statement of financial position, what was referred to as the balance sheet, where we put our assets. Assets are things that you own in the business. Liabilities are things that you're owing someone, like the loan you're owing the bank. So it's a liability. Okay? And your equity, where you think about your capital, the profit and any drawings that you've made. Drawings when you take out money from the business for your own personal use. Capital, the money you inject into the business as the owner of the business. So these three key things might be the reason why the profits are so high, yet the company is going down the drain, is collapsing. Because they've not thought about their tax in advance, set money aside for tax. They've not paid the loan and they haven't set money aside to pay the loan. They have to pay. And when you're paying the bank, you need to think about the interest. The loan will not come interest free. You always get interest on it. Okay. So think about this. And the last one being that your customers might have taken your goods. You might have sold to your customers on credit. So you would generate what we call in accounting receivables. Simply saying the money is not with you, it's still with your customer. When you go ahead to prepare what we call the cash flow statement, you will notice that the cash that you actually have in the bank is very small. But on paper, your company has painted a rosy picture of making profit. Watch out for more tips on how to survive as a business person, or if you're thinking of opening your own business, watch out for more videos, subscribe, like, and share. Thank you.